If you're thinking about buying Manhattan real estate in 2026, this might be the most important video you watch this year. Because right now, something is happening in the New York City real estate market that we haven't seen in over a decade. And it's creating both massive opportunities and serious risk for Manhattan homebuyers. I'm Dewey Moss, a luxury real estate agent here in Manhattan. And today, I'm breaking down exactly what's happening in our market, who should buy New York City real estate, who should wait, and the 3 insider strategies that could save you hundreds of thousands of dollars. But before we get into it, if you're serious about buying in New York City, I want to give you my exclusive New York City buyer's cheat sheet, the same one I give to my private clients. I'll tell you exactly how to get that completely for free at the end of this video, so make sure you stick around. All right, let's dive in. Now, let's talk about what's actually happening in the New York City real estate market right now as we head into 2026. First, mortgage rates. We're currently sitting at around 6 to 6.5%. Now, I know that sounds high compared to the crazy low rates that we saw a few years ago, but that was the anomaly. If you consider rates over a 50-year period, it's actually quite normal to low on the interest rates. But here's why that matters. Economists are projecting that mortgage rates could drop to around 5.2% by late 2026, and that's significant, and I'll tell you why in a minute. Second, transaction volume. Despite the higher interest rates, deals are actually getting done. Buyers and sellers are meeting in the middle, and we're seeing more activity than many people expected to have during these selling seasons in Manhattan. But, and this is third, Manhattan inventory. We're seeing inventory levels decline in Manhattan, especially in the luxury real estate segment. When inventory drops, that typically signals either price stability or appreciation on the horizon. And fourth, the overall New York metro area is showing some cooling, but Manhattan luxury real estate is behaving differently than the broader market. We're seeing resilience in prime neighborhoods, and that's creating some really interesting opportunities. So what does this all mean for you as a potential Manhattan buyer in 2026? Well, that depends on your situation, and I'm going to break down both sides of this equation. Let's start with the case for buying in Manhattan in 2026. Here are the 3 biggest reasons why this could be the perfect time for you. Reason number 1 is the rate trajectory and the refinance strategy. So look, if rates drop to that 5.2% range by late 2026 or into 2027, we're going to see another surge in buyer competition. Manhattan real estate prices will likely go up as more buyers flood back into the market. So here's the play for you. If you buy now at 6 or 6.5%, you lock in today's prices before that appreciation happens. Then when the rates drop, you simply refinance into that lower rate. You get the best of both worlds. You bought before the prices went up, and you eventually get the lower rate anyway. Reason number 2, negotiation power in New York real estate. This is very important. Right now, you have more negotiation leverage than you've had in years. Sellers are coming around and being more realistic. They know that they can't get the 2021 prices where everything was really priced high. This means you can negotiate on price and possibly some other costs that normally couldn't be touched. This is the sweet spot where smart buyers are getting deals done. And reason number 3, long-term value and Manhattan's resilience. Manhattan real estate has been one of the most resilient markets in the world for decades. If you're buying as a long-term investment, 5, 10, 15 years, then trying to time the absolute bottom is way less important than simply getting into the market. Time in the market beats timing in the market, especially in Manhattan. Now, let's talk about the other side. When should you absolutely not buy New York City real estate in 2026? Well, red flag number 1 is you're planning to move in less than 3 to 5 years. Transaction costs in New York City are brutal. Between closing costs, broker's fees, transfer taxes, and mansion tax if you're over $1 million, you're looking at 8 to 10% of the purchase price just to get in and out of a property. So if you're not staying long enough to build equity and appreciation, you could actually lose money. Red flag number 2 is you don't have the financial foundation for buying in New York City. If you don't have at least 20% down, 6 to 12 months of reserves, and stable, verifiable income, this is not your your time. The New York City real estate market rewards prepared buyers. Co-op boards are very, very strict and lenders are careful, so you need to be financially solid according to whatever criteria the co-ops or condos require. And red flag number 3, you're buying out of FOMO, fear of missing out on New York City real estate. If you're feeling rushed or pressured or like you just need to get something because everyone else is buying, stop right now. The wrong property at the right time is still the wrong property. I've seen too many buyers regret purchases they made under pressure, so don't be that person. Okay, so whether you decide to buy or wait, here are my 3 insider strategies for buying Manhattan real estate in 2026. Strategy number 1, get pre-approved now, even if you're not ready to buy immediately. This does 2 things. First, it locks in your rate and gives you certainty about your buying power, because the buying power in New York is not just about your mortgage. It's about your mortgage and maintenance payment and overall costs. Secondly, it makes you a serious buyer in the eyes of sellers and their listing agents, as well as buyer agents. And in a competitive situation, the pre-approved buyer and the prepared buyer wins every time. Strategy number 2 is focus on the value in New York City real estate, not perfect timing. Look for properties that have been on the market for 60 to 90 days plus. Look for motivated sellers. Look for buildings with strong financials and low maintenance or common charges. These are your opportunities in Manhattan real estate. So don't get caught up in trying to time the market perfectly. Focus on finding a property that makes sense for your situation now. And strategy number 3, build your New York City real estate team before you need them. You need 3 people in your corner to be successful in Manhattan real estate. First, a Manhattan real estate agent who's going to act as your buyer's agent and be on your side. And this real estate agent really needs to know the Manhattan market inside and out. Someone who can show you off-market deals and negotiate on your behalf. Second, a mortgage broker, and they should have access to portfolio products and creative financing solutions, and they need to be in New York City and have dealt with co-ops and condos on a regular basis. This will make your financing much easier and cause a lot less issues through the deal. Make sure they're in New York City. And third, a real estate attorney who specializes in New York City co-ops and condo transactions. This is extremely important, and it's a must-have because New York is an attorney state, so an attorney must be involved in the transaction. These 3 people will make or break your buying experience, so it's best to put that team together first. You're probably going to look for that great buyer's agent first because they can certainly help you with the other team members. All right, now here's where I want to help you even more. I put together an exclusive New York City buyer's cheat sheet. It's the same cheat sheet that I use with many of my clients when I'm first talking to them. You'll get some valuable information about the process of buying in Manhattan. So to get it, just click in the link description below. It's completely free, and this is my way of helping you make a smarter and more informed decision. So is 2026 the perfect time for you to buy New York City real estate, or should you run? Well, here's my honest take. If you're financially prepared, if you're buying for the long term, and if you're working with the right team, 2026 could be an incredible opportunity for Manhattan buyers, especially if you act before the rates drop and competition heats up again. But if you're not ready, there's absolutely no shame in waiting. The key is making an informed decision, not an emotional one. And if you found this video valuable, please hit that like button, subscribe for weekly Manhattan real estate insights, and drop a comment below letting me know, are you buying in 2026 or are you going to wait? I read every single comment and it helps me tailor content to your needs. Again, I'm Dewey Moss, and I'll see you in the next video.